Hello, everyone. COVID-19 has undeniably altered the economic landscape, even though Indian businesses have shown resilience in the face of adversity, broken supply chains, delayed payments, and so on. Businesses have continued to make variable degrees of adjustments to adapt to this changed perspective, which is now the new scenario for the foreseeable future. As per the Startup India, 81% MSMEs are confident of post-COVID recovery. 57% said in a survey that they don't have enough cash reserves to survive. It also revealed that 40% tried to borrow money to cover their expenses. However, only 14% of the overall borrowing is from the formal borrowing sources. Good evening, ladies and gentlemen. On behalf of TAI Ahmedabad, I'm extremely delighted to welcome you all to a very key session on how credit financing and factoring can help our businesses post-COVID and what other options we may have to not just survive, but to survive well. Our guest speakers are Ronak Jani and Bijal Jani, and thank you to both of them for joining us at this hour from New York, which I understand is 6:30 in the morning. We are
Thank you.
also joined by the TAI Ahmedabad president, Mr. Saurabh Mehta, and we have our charter members also with us. Mr. Sailesh Goel, he is the founder of Simulations Public Relations Management, and I'm actually delighted to also add here that Sailesh ji got featured in the maiden list of Reputation Today Top 100 Influencers 2020 from the corporate communications and PR space in India. And of course, we'll have interactions with all of you a little later. Before I introduce our speakers for today, I'll request Saurabh Bhai to please speak a few words.
Thank you, Piali, and welcome everybody. First of all, thank you, Ronak and Bijal, for getting up so early in the morning and giving us for the session. We really appreciate that. And thank you, Shruti and Shailesh ji, for attending us from TAI on behalf of TAI, getting on board with us. In TAI Ahmedabad, we have been, COVID, TAI is all about networking, and we have all these sessions, and generally we used to do a lot of networking, and we are physical networking sessions, right? But now in the COVID scenario, with we have been working really hard, and we have about 27 sessions online, and we have speakers from like the latest speaker was Brian, who is a Silicon Valley investor with more than nearly $1 billion invested and stuff like that. So we have had very informative sessions across the board for various sections of our membership. And we have been trying to do our best to get really, really good information across to our members and try to get some networking also done. And from now on, we also in that line of number of webinars, we also have got Ronak and Bijal to give us an idea about financing, right? All of us nowadays, especially in the startup world, start to look at equity. But now Ronak and Bijal also, because every time you go to somebody and say, oh, I want equity, but most of the time the advisors always tell you that equity and debt financing, because you don't want to let go of too much equity from the very beginning or even in the middle, when especially your business is, you just need to tide over for a few months or 6 months. See, the COVID thing, I personally feel is something, it's a blip in your overall professional lifetime, right? It's about 30 years, 40 years, it's 1 year blip. So you have to, not get despair or anything like that. You just have to bear it out. Depending on how your business is, what kind of business you are in, you cut down, you do this, you borrow money, you do get some alternate sources of financing and keep afloat till the next year. And next year is not going to be COVID in 2020. I hope not. So, but obviously not. And nobody wishes that to happen. So 2020 is going to be something we're going to tell our grandkids about. But right now, so for Ronak and Bijal, they also give us options, different alternatives to going with just, rather than diluting your equity, there are other options. to keep going and grow your business till everything comes back online. So over to you, Ronak and Bijal, to tell us more about what are the alternative sources of financing, and then I think we will come up with some few questions and things like that. Okay. Thank you very much once again for getting up so early in the morning, and thank you everybody for attending.
Thank you, Saurabh, and I welcome Shruti Kushwaha, another charter member from Ahmedabad chapter. She has been working a lot on the pharmaceutical and medical field and is mainly into product development and product innovation. So welcome, Shruti. A quick introduction to our speakers for today. Ronak Jani is the Managing Director of Jani Financing and Investments at New York. He is a strategizer with 20 years of experience in financial services and risk and investment management. He has been facilitating global financing projects within pharma and medical, technology, and international real estate development. His other focus areas have been valuation analysis, global PE investment strategies, and renewable energy. He is recipient of 40 under 40 award and has also been awarded by the Permanent Mission of India to the United Nations. And most importantly, he originally, as I understand, also belongs to Ahmedabad. Bijal Jani is the founder and a corporate strategist of Jani Consultancy. She has certification in entrepreneurship financing and profitability specialization. She has also been recognized as Empire State Counsel by the New York State Bar Association. With these words, I welcome Ronak and Bijal, and over to you for an exciting session.
Thank you. Thank you. Let's go straight towards the screen sharing. So let me just bring that up. If Biali, if you can just enable the screen sharing.
Can you do it now?
Let me just give it a check. Yes. All right. So good morning, good evening, everyone. Thank you for joining in. I know it's also late in the afternoon. It's been a long day's worth of hard work, and you're joining into this. And Bijal and I, we want to make this as interactive as possible. We actually want your questions, and we want to try to help you guys out in this post-COVID world that we live in. Just the same way as Saurabh has also indicated, right now financing has become very difficult. It's very unique in this post-COVID world. We don't know where everything is going, but just as everyone's indicating, it's a blip. It's going to just be here for a short period of time, and the minute it's done, we do see the economic forecast to be very good and strong worldwide. In the meantime, the question becomes, what type of financing can we receive in today's market, in this current post-COVID world? And that's where we get into credit financing and factoring and how it can help your business right now. How do I get to the next phase? There we go. So topics of discussion for today: financing options in a post-COVID world, financing options in a global marketplace, leveraging banking instruments to support your domestic financing needs. A quick background, because you should know always who your speakers are, whether they have the expertise or the experience to give you the knowledge that's on hand. But just a very quick background for Bijal. She has a bachelor's in public accounting from Pace University. She has a Juris Doctorate from Torah Law College, certification by UPenn Warren School of Business for entrepreneurship, financing, and profitability, specialization towards venture capital and corporate valuations, leveraging over 20 years of experience as an attorney. She's also a member of Thai organization New York, Elevate Network Council, finalist of New York Enterprise 2012 as one of the best accountants and attorneys, recipients of Excellence of the Future Awards for Jurisprudence and Jewish Law, distinguished as Empire State Counsel 3 years in a row, and she's a board member and treasurer of Rockland County Women's Bar Association, member of Women's Bar Association for the state of New York. And she's proactive proponent for women empowerment, gender pay equality in nonprofit organizations fighting domestic violence. Quick background for myself.
One second, Ronak, I
Yeah,
just
please.
wanted to just add that as an Indian female entrepreneur and founder, I take great pride in supporting Indian-based teams as well as teams that have Indian women on them. So one of Johnny Consultancy's chief missions is to invest in Indian-based or women-owned minority teams.
And going on to myself, I have a bachelor's in public accounting from Pace University, an MBA in financial management from Lubin School of Business, Pace University, certified commercial investment manager from CCIM. I've been certified by Warren School of Business, UPenn, for fundamentals of quantitative modeling. I've done over $375 million worth of commercial development projects just right here within the US, with over 10 plus joint venture projects within India, from artificial intelligence, iris scanners, augmented reality, polymer road development, municipal solid waste energy-based projects. Our firm Ananta Ventures is also part of the UN Global Compact. I'm also part of New York Private Equity Network, Private Equity CFO Association, and many other organizations. I am a proud board of director and charter member of Thai New York chapter. I love Thai, and I think Thai has done a great job here in New York. So do come to our events also. It's an open invitation to everyone out there. And I basically do a lot of strategizing on current economic conditions with an insight on how the future growth of companies will be working. So let's begin in talking about financing options in a post-COVID world. So basically, why are we here today? Because everyone is having a very similar problem within their businesses, where there is a lack of money within the banks. Banks are inundated in handling government COVID loans and grants currently right now. And banks simply do not have the money or the means to give you the financing that you are looking for. Their traditional algorithms do not take into account the COVID uncertainty and chaos. So what does that mean? That also means that when you have a real estate-based project in India and you're sitting on a land bank of over $20 million, or let's say 100 crore or 1,000 crores and all that, well, today, is it really worth 100 or 1,000 crores? And the answer is no, it's not. And that's the problem that the banks are having. The banks are not able to figure out the proper valuation. So what we're trying to give you is different ideas on how to bring in other forms of financing for your international business, whether you're doing import-export, or whether you're doing any form of domestic business, and also for e-commerce and for technology.
So the global pandemic and the disruption that it has created in almost every industry possible throughout the globe has created some very interesting opportunities. And what we have observed in the last 5 months is that those who are able to reach out, think outside of the box, and really bring something different to the supply chain and be able to reach out to a new network of connections rather than going through the same old banking channels, they can really take their businesses to new heights. And those who were traditionally not allowed to be able to get their foot in the proverbial door, I think that this disruption is allowing a lot of us to be able to get that opportunity.
Correct. So today, what are the challenges in that the Indian companies face? So we have a couple of charts here that's been pulled out by Exim Bank of India. This was one of the more, I would say, recent papers that they did, which was December of 2019. If we look at this, challenges faced by Indian project exporters, there are all these challenges. But if we look at the main top 4 ones, number 1 will be high political risk in project country. Number 2 will be institutional delays in project countries. Number 3 will be low local labor productivity. And number 4 is financial constraints. Factors restricting Indian project exporters from exploring opportunities to newer geographies and newer sectors. Number 1, absence of favorable project opportunities. Number 2, high competition. Number 3, we have another similar pattern here, lack of financial resources.
Now,
However,
I want to just be able to add, 1 second, if I could just add that there have been major shifts, as you know, in the global relations, right? And so you've got United States with a president in office who has been he's had some bumps along the way, but his administration has been very conducive to being able to create some new bridges with the Indian counterparts and Indian companies. And China, while it is fighting to be able to retain its top tier status, we believe that with the current environment in India and the push with the global mindsets of being able to shift away from Chinese suppliers, but rather go to trusted Indian entrepreneurs and business owners, I think that creates a great different opportunity for everybody in India.
Especially for the legal system, because with India being a democratic legal system where patents and everything are more valued than that of China, you will see a lot more influence and relationships being built between the West, Europe, and North America, and that of India. So this is something we definitely want to take advantage of. And if we see the most challenging geographies for Indian project exporters, the most challenging happens to be Africa, second with the Middle East, that includes Dubai, third being Southeast Asia and Asia in general. So what are the best countries for India to be working with, or they have successfully gone with? Number one seems to be with the Pacific region, with Australia and New Zealand. Number two is with Europe, and number three is with North America. So this is a great opportunity that India has been having with this side of the world. Now with the rhetoric, as Bijal just indicated, with our president and also with, I think, many other prime ministers around the world, with UK and everyone, indicating that, listen, we need to start breaking ties off with China and start building ties with an educated workforce from India. This is a great opportunity. So I feel that this COVID world and this COVID situation is giving India a very big opportunity and platform here to increase their business scale. So what are the different options of financing? One, first and foremost, we have something here called supplier credit financing. So a lot of individuals don't know too much about supplier credit financing. It is a proponent here in the US. It has been a very strong base of financing since the 1950s, actually. So what is supplier credit financing, also known as SCF? Well, what is your need? That's really what it comes back down to. So let's say number one, you don't have the money to purchase from your supplier. You don't have the raw materials to make your end product. So you get in contact with the hedge fund, and the hedge fund purchases your raw material from the supplier on your behalf. Number three, the hedge fund is going to resell it to you with a slight markup, creating an accounts receivable. Because if there's an accounts receivable, there's a supply chain that is now happening. There's a rotation that can happen. Now you're given X amount of days to utilize that product, create your own final product, make a profit, and pay back the hedge fund. And this way the rotation continues. So
now,
if you need 30 days, you can have that, or you can have it to 90 days. It's really up to you. Sorry, go ahead, Bijal.
Yeah, additionally, the established international financiers in the factoring space, what they have all done is in the last several years, they've really amped up their technology platforms. So whereas, if you went to a traditional banking outlet across the world, what could take in just underwriting would be several weeks or several months. This kind of financing is something that can be cleared up in a matter of days at times. So that is something that's very viable that people should take into account.
Correct. This can be done within days, and automatically you now have the money that you need in order to be moving ahead. So another layout of this would be, see if we can get right back onto this. There we go. So how it works. So this is a little bit of a cleaner model. So let's say, for example, we're coming in as a hedge fund. Let's do this hypothetically. So we're coming in, we're purchasing the inventory from the supplier on your behalf. So if we look at this step one section right over here, JFI would then immediately resell the product to the client at a markup. So let's say we're buying it for 100 rupees and now we're giving it to you for 110 rupees. So that's where my profitability comes in. But you're not paying me on the spot. You're still going to be creating the product, selling the product further ahead, making your money, and then you're going to be paying me, which is the step three part, where the client pays JFI the purchase price and the markup at a mutually agreed upon date. So again, that can be 30 days from now, 120 days from now, whatever it's been agreed upon. the payment is insured by well-known insurance companies. So that is my guarantee through the insurance companies that if there's a default, then I will get my money. Now, another similar form of financing of this, but it's still different, is called purchase order financing. So also known as PO financing. So what is this? This is basically, number one, you receive the liquidity in advance by the hedge fund to fulfill the manufacturing orders and sell it overseas. So in this situation, the hedge fund is not buying it for you. They're giving you the money in advance. They're giving you the money in advance. You do whatever you need to do to fulfill the manufacturing orders and sell it overseas. Number two, payments are collected by the seller and put into a mutual escrow account. So let's say, for example, we have a very large Indian pharmaceutical company. They are manufacturing injections, all right, or pills. They're selling it to the US to a company like Pfizer. Well, now when the money comes back, Pfizer is going to be putting the money into a joint escrow account, which the Indian pharma company and the hedge fund both have control over. So that money goes back into a joint escrow account. Now, the number three, the hedge fund deducts their small fee, and the remaining balance is forwarded to you, and the rotation continues.
And to add on this, both of the slides regarding supply chain as well as purchase order financing, one of the factors that Ronak and I like to call the secret sauce when it comes to success in this kind of financial vehicles is credit risk insurance. We work with a wide network of credit risk insurers within India, within the global marketplace. So we have our partners in Europe as well as the United States. And what credit risk insurance does is that, let's say you don't have that perfect, spectacular credit background, or your credentials have a little bit of dark spots on them. Well, working with a legitimate credit risk insurance company, which can give you a policy for very little investment dollars, you can actually be able to leverage that credit risk insurance policy and able to get that financing that you really need.
So what are the benefits of purchase order financing? It's not a loan. Number one, it is not a loan. And this is a very big aspect that I want you guys to understand here. If it's not a loan, meaning you are not liable in paying it back. Why is that? Because at the end of the day, you are going to be making a product, you're going to be selling that product, and the seller is going to be paying it back. Pays or guarantees payment to suppliers, allows you to take on bigger orders. PO funding includes accounts receivable management. You're leveraging our fulfillment and logistic expertise, and includes bankruptcy credit protection through non-recourse factoring. So 2 factors in that last part. This is non-recourse. No personal guarantee. Again, no personal guarantee. This is why we always encourage clients to take this. And they can work for companies that are going through bankruptcy. There's a lot of companies right now that are going through bankruptcy worldwide, right? So it's why would the hedge fund still work with them? Because it's just a down cycle. And again, this is a cycle. So what comes down is going to go right back up. And the hedge funds have no problems working with companies that are just going through a bad period right now. And that's all it is. It's just a bad period. So there is a lot of advantages by actually having this. And again, we're working with all these different industries. So what industries currently use supplier credit financing and PO financing? Pharmaceuticals, manufacturing, nutraceuticals, medical and hospitals, international commodities trading, technology and IT companies, franchise restaurant factoring, and distribution facilities.
Yeah, so I think that one of the great takeaways from the last few months under COVID, it has really statistically proven that if you are a business that is involved with anything health-related, self-care, vitamin-based, as well as any kind of delivery systems, this is your moment to shine, and you really need to be able to take up the opportunity through these financing options and be able to take your business to a different level.
Exactly. And again, these are no personal guarantees. These are fully non-recourse loans. There is no client credit checks. Remember, the hedge fund is also working with companies that are currently in bankruptcy. So the only credit check that is done is that of the buyer. So they're making sure that the buyer, the people that you are selling to, which are also known as the buyers, we have to just make sure their credit check is good. And yes, we can get some sort of a guarantee that we're going to get the money back. It's unlimited rotation, unlimited advance amounts, as if you got yourself a blank check. That sounds pretty good, right? As if you got yourself a blank check. So today you're doing $100,000. Tomorrow you're doing $1 million. It's just nonstop. There's no limit to this. Now, again, this is not a loan, but an advance. So all advances are on the asset part of your balance sheet, not on the liability section of the balance sheet. So if your company is public, and we have a couple of clients right now, which are publicly traded in India, they are using supplier credit financing. So what's being done here is that because they're getting the money, they're getting $15 million. Now, when they're getting $15 million, and that's going on the asset section of your balance sheet, and they're getting rid of that line of credit that they had from the bank, or the bank itself got rid of the line of credit in this COVID situation, automatically their stock price went up. So this was not just free money for them. They were making money off of supplier credit financing and PO financing. That's just the beauty of this entire form of financing. Again, you can get paid as quickly as within 48 hours. Certain key factors is you should have a bare minimum of 5% net profit margin to ensure there's enough room for the hedge fund to take the risk. And generally, hedge funds like to see about 4 rotations a year with a minimum about $100,000 per rotation. So just keep that in mind, because remember, the hedge fund is, what is a hedge fund? They're coming in to take a high risk. It is still a risk for the hedge fund, right? They're still working with bankrupt companies and all that. So we want to ensure the fact that they are working with companies also that have some sort of a historical financial cash flow model inside of them. If they're not doing well and they're in bankruptcy mode, well, how was it before bankruptcy? Was it good enough? Were they still strong? Okay, yes, they were. Great. The hedge fund will still work with them. Now let's go into those that are saying, listen, we're domestic. What about us? We cannot get supplier credit financing. We cannot get PO financing. So how do I get financing for domestic projects? Now for that, again, what are the issues with banks in India? Banks are inundated in handling government COVID loans and grants. Banks are sitting on piles of cash, but overly cautious in current valuations due to the market uncertainties. And that we've heard nonstop from so many real estate developers, from so many e-commerce businesses in India. Banks simply abhor volatile markets and supply chain disruption. So what are my options with the banks? If you have a viable project and established payment history, then give them, the banks, comfort level and provide them with additional collateral through standby letter of credits, bank guarantees, and performance bonds. So what are these 3 banking instruments? So we have banking instruments that are being offered known as standby letter of credits, which are also known as SBLCs, bank guarantees, BGs, and performance bonds, PBs. So let's start with the first one right here, where we're talking about SBLCs. A guarantee that is made by the bank on behalf of a client, which ensures payment will be made even if their client cannot fulfill the payment. So SBLCs are issued subject to UCP 500 and ISP 98. Then you have a bank guarantee, which is basically the same thing as an SBLC. The only difference is the obligation subject to civil law. So let me just stop right there between these two. We've had real estate developers, specifically, I would say in Bombay and in Bangalore, that have approached us that said, listen, we are getting loans from ICICI and HDFC, but they don't feel comfortable with our land bank valuation. We have $100 million worth of valuation. They're looking at it, it's only $20 million. How can we move ahead? So we said to them, why don't you get this additional collateral? This way they feel comfortable. So if you get a private bank, or if you get a prime bank coming back, giving them the additional collateral, this way ICICI, HDFC, or any private cooperative bank in India will feel comfortable in moving ahead and saying, okay, I'm willing now to give you 75 or 85 or 95% LTV, loan to value, for your real estate development. as long as I am getting the 60, 70, 80, 90, 100% bank guarantee from this other bank located in America. So this is something that we have seen that's being helpful for the real estate developers. Now, for those that are doing contracting, we go into performance bonds. So what are performance bonds? It's very similar again to SBLCs and bank guarantees. This is an additional form of collateral, but it's more of a surety bond issued by the insurance company or a bank to guarantee satisfactory completion of a project by a contractor, generally utilized within the construction industry or within the government projects. So again, these are banking instruments that can be utilized for domestic projects as well as for international trade. It can be utilized for international trade if you're looking at, let's say, back-to-back LCs. So you're not fitting into supplier credit financing or PO financing, but you need back-to-back LCs. Well, SBLC can come in and help you also for that.
The key here is to be able to work with only experienced professionals in the industry who already have, number one, an established relationship with the foreign counterparts. Okay, so whether you're working with the American or the European banks, which are going to support you in these financial vehicles, you want to be able to only work with somebody who has control over the file. And additionally, you only want to trust people who can hold your hand and help you do the due diligence aspect of the paperwork that's going to have to be submitted. Please do not work with, those fly-by-night kind of operators who don't know the differences in the MTNs that are issued, as well as who don't understand the banking logistics, nor do they have any control over the bank officers who are going to be significantly controlling that transaction.
That's very correct. And you want to make sure that you're not working just with anyone, because SBLCs do cost money. And even issuing an RMA does cost money. So many times in SBLC situations, even with a prime bank, they'll be asking for fees up front. So we don't want you guys to just be laying out money left and right. It should be given out to proper individuals and companies that know how the process works. So let's go through the step-by-step layout here. There's two ways of getting an SBLC. One is through a prime bank and the other one is through a private bank. So if you look at the red box, which is right here, this is your prime bank scenario, where you have either Chase, HSBC, Citibank, TD, for example, based in America, TD being based in Canada. They forward the SBLC to your bank, State Bank of India, HDFC, Bank of Baroda, ICICI, and then that money is then brought straight over here, which is your real estate development project. And State Bank, HDFC, and Bank of Baroda can then monetize against this additional form of collateral and can now go ahead and give you the loan that you need in order to fulfill your project. But let's say you have a private bank involved. So on this side, in the blue box, you will see USA Private Charter Bank. And let's say this India beneficiary bank, this blue box right over here, is your cooperative bank in India. So how does it work? The USA Private Charter Bank will give it to their international correspondent bank, which is, again, the prime banks. They will forward the SBLC to your international correspondent bank, which is the India's prime banks. Then that SBLC is forwarded to your cooperative bank or your smaller bank, which then monetizes against that SBLC. And again, your real estate project is being fulfilled. So the procedure is not difficult. The procedure is not long. This whole scenario, whether you're working with prime bank to prime bank, can be done in a course of 3 to 5 business days. That is it, 3 to 5 business days. If you have private charter bank involved, giving it to your cooperative bank in India, that can take a grand total of, let's say, 7 to 10 business days. It doesn't take longer than that. So again, this is a great opportunity for you to bring in additional collateral for your bank so your bank can give you the loan. There's a very big question that I get from a lot of people. Can we get a bank loan from America? The simple answer is, if you do not have a corporation here in America, you cannot get a bank loan from America. And if somebody promises you a bank loan from America and you don't have any standing in America whatsoever, run away from that person. because you're going to lose money. There's no possible way to get a bank loan from one country and to get it to another country because it works underneath the banking jurisdiction of that country. So the only other way of doing it is by getting additional form of collateral through an SBLC, a bank guarantee, or a performance bond. And yes, banks in India will be very happy getting a additional form of guarantee from HSBC, Citibank, even from United States private charter banks that are registered as banks in the States and the US.
Additionally, I just want to point out on that note that Ronak brought up regarding corporate presence within the United States or in any other countries. One thing that should be cautioned for all businesses is that we're fully expecting that with all the national debts that have risen quite significantly due to the pandemic crisis in every country, we do expect that each country will be taking steps within which they're going to try to control the revenue streams and tax the business owners. So you want to make sure that you do not work with quote unquote partners who are not going to be fully proficient on corporate responsibility and regulatory compliance in whichever countries you're going to be affiliated with. That is really, really important, we find, with a lot of our e-commerce clientele as well. So only work with trusted team partners, only work with trusted attorneys who are experienced in this field. Otherwise, you could end up with a very, very hefty tax bill, not only with the foreign government, but as well as the domestic government.
Exactly. That's not something that we want. We want to make sure that's a clean transaction for you. So, and one last final thought here is the difference between prime and private banks as applied to SBLCs and BGs and also performance bonds. So what are the main difference? In a prime bank, which is HSBC, Citibank, and all them, they tend to give you about 60% of the face value. All right. They're generally, but they do come in with high credit rating. Remember, Citibank, HSBC, you're looking at the top 5 banks in the world, right? So they come in very high credit rating. Their ability to work with any bank worldwide. And then because you're coming in with such a high private bank, prime bank, your bank in India should be able to give you 90 to 95% LTV. I've talked to a couple of banks in India that said, well, if HSBC is coming in with 60%, we're only going to do 90% of that 60%. And my response to that bank is, what is your risk? You literally are not even taking any risk whatsoever. And that's unfair to the client. So don't let your bank in India say to you that we're just going to do 90% of that 60%. No, that's wrong. They should be giving you above and beyond because you are coming in with a prime bank. Now, if we have a private bank, what do? They're coming in with 100% of the face value. So private banks tends to give you 90 to 100% of the face value. The negative side is they're private banks. So they don't have any credit ratings. So a lot of Indian prime banks may not want to work with them. So this is a better option for the India's cooperative or smaller banks, which are trying to do deals. Remember, a lot of cooperative banks are trying to find ways to give out a loan. If they don't give out a loan, then they're not going to be able to sell that loan on the secondary market. Cooperative banks can only become stronger if they have a loan portfolio and only if they can sell that on the secondary market. Banks do not make money just by you doing a checking and savings account. They do not just make money off of that. They make more money upon loans itself. That smaller bank can give you anywhere from 75 to 90% LTV, even though you bring in a private bank. So don't underestimate private banks. They are very strong. They'll definitely work very well with your smaller banks. Current case studies right now include us working with sugar factories out in Maharashtra and UP. And a lot of the sugar factories work with their local cooperative banks. So what we do is we manage out the private bank SBLC here from the US. It goes to India and it goes to their cooperative bank. And as a result, their cooperative bank is then moving ahead and giving them the loan that they need. The cooperative banks are very happy taking these private SBLCs because, again, They are looking ways of funding you loans. They don't make any money if they cannot fund you any loan. All right. And that's about it. So I think we basically, Bijal and I worked this out in a way that we would be done in about 30 minutes. So which we are, and we definitely want to take questions from all of you in order to move this further ahead, the conversation, and try to make this more interactive. One of the questions that Bijal we had received from Nitiraj was, what about financing options from financial institutions available for an absolute startup based in India into hardware technology from India and the USA? So there's a couple of aspects on this that I just saw, that they're in hardware technology from India and the US, so they're already doing international trade in that regard. And they are an absolute startup. So Nitiraj, first and foremost, straight off the bat, I'll tell you, with over 20 years of experience, never ever tell anyone you're an absolute startup. That's the first thing you do. You never tell anyone you're a startup, all right? So you should go out there and you should let them know that, listen, this is what I have. I have the hardware, I have the technology in order to sell this further ahead. And first and foremost is bringing in your partners from overseas. So you're going to need licenses, right? So if you're doing import-export, you're going to need an IAC license from India, an import-export cooperation license, right? So you're going to have that license in place. So you're already coming in with value. It's not like you're not coming in just with a startup with nothing in the account. That's not the case. You are coming with stuff into this. So by you coming in with the IAC license, and now you're coming with, which is B, which is the product itself that you want to bring out there. Now you have to do the C part, which is you need to have your partner on the ground here in the US that can import it in. Who are those importers? Who are those buyers that we're looking at? Remember, if we go back to supplier credit financing, there's no credit check on you. There's credit check on the buyers. So we have to make sure your buyers are strong onto this. And if your buyers are strong, then yes, we can look at supplier credit financing for your entire technology and your entire hardware development, so that this way you're able to sell it forward ahead. Bijal, if you want to jump in.
Yeah, so a couple of thoughts following up on what Ronak said. So yeah, I do agree with him. I think a lot of very innovative and creative people actually do themselves a disservice by identifying themselves first as a startup. I think the startup word has been overused, and I and Ronak would definitely, in working with our clients, recommend that you step away from, positioning yourself as a startup, as a newbie in the industry, but rather focus on, what got you started on this journey in the first place, right? What is your mission? And very, very important, what is the experience that you're bringing to the table? Like, you didn't just, come out of college yesterday and then all of a sudden here's this great idea that I came up with and it's got $100 billion valuation. Yeah, okay, great. No, you have wonderful experience under your belt. So take a moment, or take many moments, take a step back and then learn to be able to review the experience that you're bringing with yourself, with your team, highlight all of that. I would say number one, first and foremost mistake that I see a lot of entrepreneurs making is they will be pitching to third parties, but their LinkedIn profiles are a mess. Okay, or, if I can have $5 for every tech person who, is promoting some kind of a technology-based product, yet they don't even have a good, clean website set up for themselves. So number one, focus on the messaging. Stay away from making yourself appear or even not valuing what you're bringing to the table yourself by saying, I'm just this or I'm that. No, you're bringing a lot to the table. So that's number two, highlight that. Number three, get in touch with competent veterans in the industry. So people like Ronak and I, we're both respectfully bringing 20 plus years of hard work in this industry. And so are a lot of other professionals. And we take great pride in working with our business partners who are also bringing their expertise. Ronak and I, we don't pretend to be experts on credit risk insurance, for example, or, we don't pretend to be able to say, well, I've got the bank in my back pocket. We don't play that game. What we do is we work with the professionals, the experienced people, and that will help you leverage what you need to set up. In particular with hardware technology sales and e-commerce, what you do want to be able to watch out for is, again, like I stated, make sure you understand corporate presence very well. You need to be able to work with good business partners and legal partners who can help you go through the weeds of parent subsidiary corporate relationships. Really work with well-seasoned financial accountants, okay, who are well-versed in understanding multi-jurisdictional taxation. A lot of people in India, what I have found is they lump United States as just one big package deal, or sometimes even worse, they lump Canada and United States together as a package deal. It's not. They're completely separate jurisdictions, subject to completely different regulatory compliance as well as tax ramifications. So what you want to be able to do is work in line with established and industry veterans. Keep in mind also, when it comes to the United States, and if you're going to be considering the United States as a market for your consumer or your B2B or B2C product lines, you know, United States, each state will require you to have different taxation consequences, not only for yourself as the entrepreneur, but on the sales taxes, as well as a myriad of other payroll taxes, as well as owner compensation scales. So you do want to have all of these conversations well in advance as you set up business operations.
Just as Bijal just said, everyone likes to put North America into one basket, and it's not. United States comes with 50 states, 50 jurisdictions. And it's a massive, massive country. I think people just forget the sheer size of the U.S. We basically work, I would say, Chicago down to Florida to New York as being one region. And then we have the entire West Coast being a second region itself. It is more than double the size of India. So just the sheer size is so big. The time slots of 4 different time zones. It's very difficult even for Americans from New York and California to work with each other. So just keep that in mind. So when we say US, don't just say US, choose your state, choose where you want to work. A couple of other questions that we definitely want to reach out to. Anonymous stated here, for the credit check on my buyers, I can't provide you with their financials for due diligence because they're big private companies. How do you complete your credit check? Can I still apply for factoring finance? Simple answer is yes. Of course, you can still apply for factoring finance. The buyer check, the credit check, is done through third-party credit companies that already have their resources aligned with Bloomberg, Dun & Bradstreet, and other online company base. So when they're coming back to us, they're spending about 7 to 10 days at times to go through the credit check of these companies. What are they doing? They're doing a title check. They're making sure there's no lawsuits pending with them. There's no other historical problems of payments that are being given back from these clients. So this is what we mean by a credit check. It's not really a financial check. We're not really looking at their finances. If you're sending to, let's say, a company in the sense of Pfizer or GSK, I'm just choosing for pharmaceutical right now in the US, obviously the financials are going to be good. That doesn't mean that they're also a good credit buyer. Just the fact they're Pfizer and GSK does not mean they're good. If they have lawsuits that are being pending where they're not paying back the hedge funds, no, the hedge fund's not going to work with them. So this is a very big aspect. Almost every company in America, including ours, and we have about 16 corporations, 8 of them in the US, rest within India. All the ones in the US are part of Dun & Bradstreet. So it's rare to find a corporation in the US of any size that is not registered with Dun & Bradstreet. So they should have at least that much. If they have no credit check and they're just like off the grid, which is very difficult to do in this internet times, then no, the credit factoring company will not be moving ahead. So just understand what we mean by credit check. We're not checking their financials. Neither is the third party, neither is the hedge funds. No one's checking their financials. We're doing a full credit check. It's a background check. All right.
And the fund is simply wanting to have reassurance about corporate presence of that entity. You know, they want to be able to see that, okay, that there's a good history, that there's something viable here, and everything is based upon rotation, right? So as long as they're able to see that, you know, in the next 12-month cycle, things are going to be on the safety margin scale, then they will go forward with it.
Correct. Sanjay wrote here saying, we want to use PO financing model, but we are based out of India and our sales are primarily domestic, some exports to Africa and Asia. How do we go about this? So a couple of aspects on this. Definitely the Africa and Asia would be more your factoring side. So that is something that we would like to look into, or the hedge funds would like to look into and see what's going on there, who are your buyers and all that. I will say exactly how we started off. The feeling with China is becoming worse and worse. Even with the hedge funds in the US, they don't feel as comfortable. You're going to see a pattern here now for the next 10, maybe 15 years between India and US, where they will align themselves in the same way. And it's not just India and US. You're going to see the neighboring countries of India also going into the same realm with Bangladesh, Southeast Asia, Sri Lanka. All the countries are going to feel the same realm. So we have to know, again, which countries in Asia. But Africa, definitely not an issue. As for your domestic, there is domestic accounts receivable financing available. So that is something that can be looked into. Just as we have international, we also do have accounts receivable financing domestically within India. So this is something that can also be looked at. So again, it all depends on how much percentage of your business is outside, how much of your percentage is inside, who are your buyers, what is your net profit margin. All these factors have to be looked into. Dilip wrote here saying, hello, although I know now, but still I would like to recheck if trade finance for exports to countries like Iran, Venezuela, Cuba can be made available. The margins are on the higher side. Venezuela and Cuba is a yes. U.S. still has a good relationship with both of those countries. My concern is the buyers, whether or not there would be any credible buyers, specifically in Venezuela, and also with the credit check. Because yes, these are difficult countries to be working with in general. Number two, if the company has a good credit check coming back, that's generally because they also have an international office somewhere else, outside of Cuba and Venezuela. So there could be a chance that the hedge fund might work with their satellite office to make sure that the transfer of monies become easier. With Iran, the answer is no. Iran and North Korea is off the map because of the relationship with the US. Trust me, I do know Iran does have very good credit, does have very good high numbers. They are willing to work, and they do have a good relationship with that of India. Unfortunately, they don't have a good relationship with the US. So the hedge funds in US will not touch Iran or North Korea. Remember, we want to work with countries that have proper banking channels. The name of the game is money. So how can we make sure that the monies are being brought back and forth without incurring any other additional foreign direct investment costing? So that's a very big aspect to look into. All right.
And I would say, just to add to that, that that perhaps Dilip would want to be able to look at some other adjoining country counterparts, because
Correct.
yes, while there great rewards working with high risk based countries, I would say that in volatile markets, you should not just stay focused on even more high risk country aspects as clientele. You always want to be able to have some safe bets as well. So, look around, the marketplace is quite diverse. And I would certainly say look into new markets that are now opening up due to the pandemic.
Exactly. And like I said, we've been around for a very long time. Our experiences quickly, again, it's a family-based business. My parents are pure Ahmedabadis. They came here to New York back in the early 70s, and they have been in financial services for, I would say, almost 40 years. The pictures behind Bijal and I, these are not just virtual images. These are our office. itself. And the picture you see on screen is our office of Blue Hill Plaza. So, and we've been there since 1991. So it's going to be 29 years. So even virtually, we're still there itself. So we do have a lot of experience. We're here to help you guys more than anything else. Business is secondary. And when we come to India, specifically Ahmedabad, hopefully you can call us over for chai.
So Roderick and Bijal, we still have a couple of more questions from
Yeah, sure.
And then Sarabhai also has questions. Shaileshji, to you.
Sure. Actually, Dilibha, you just sent another one, which is, yes. So our contact details are right here. So if there is anything that we can talk about, even offline, definitely. And we'll try to help you and see where this goes. And like I said, business is secondary. First, we want to make sure that your business can succeed. So this way, if you succeed, then we can succeed with you in the future. Saurabh, any other questions?
And before I give the mic over to Saurabh, I just wanted to say that, you know, we've built up our careers in working with integrity and building relationships. So everybody who's in the audience, please feel free to connect with us. You know, we're very transparent. We believe in giving honest advice because we want to be able to help each other out. You know, in the pandemic, if there's one big lesson that we've all learned is that we are definitely in this together, and we have to respect each other. We have to respect the values and additionally the resources that we all have to offer to each other. So please don't hesitate in reaching out to us. If there's something that you need taken care of that we're not able to provide for you, we'll definitely reach out to our resources and put you in connections with the right people.
Hi, Ronak, you mentioned initially that, if you want a loan from the US, I mean, I think there are a number of companies here who would, like I have a company in the US, incorporated, I think about 10, 12 years back and filing returns for the last 10, 15 years. And that was because initially we had these contracts in the Caribbean, I'm in the technology space, and we had these contracts with the Caribbean governments, which required a US company. So fine, I mean, so we went through the US route and we incorporated a company and still, get some income in that company. So, in that sort of scenario, there are a number of Indian companies out here who do have an office in the US. And looking to the current financing, I think the US would be pretty easy. So what would it take? How does the one work? Because the US office, you transfer all the business in the US and then bill through the US and then bring it down here or whatever. How does that work if you want to take a loan in the US or something, yes, some kind of financing in the US?
If they're already within the US itself and they're filing tax returns and they're showing a sense of profitability onto it, then yes, of course, we can definitely move ahead and get them the conventional financing, bridge lending. They're even probably capable of even getting an SBA loan here within the US with a very low interest rate. So
yeah,
there are different
avenues. Corporation. It would be a foreign-owned corporation,
which is fine. Which is fine. That's not a problem at all. That means that if they're foreign corporation, it's a C corp here within the US, which will show 100% ownership with that of India. That's completely fine. We have done many loans like that in the past. And remember, who's getting the loan? The corporation is getting the loan. So sometimes it can be, that will be a non-recourse loan that will be given over to them because there's no personal guarantee then. Sometimes they will look at saying, look, even though you're fully foreign owned, we still want to have maybe one or two guarantees personally to be brought up. And that's by case-by-case scenario. But yes, they are able to still get a loan here. And then once the funds are given to that corporation and the banks know that it might even go foreign because that's where the supply chain originates from. So they are well aware of that.
To add to Ronak's point, Saurabh, the critical thing here is that, when it comes to financing, corporate presence in the United States can be established with multiple vehicles. So that's really not an issue. One word of caution that people should not confuse with is, financing is one thing, and then let's say getting investors is something else. Okay, so if somebody is looking for investors for equity ownership, definitely that's going to take a different range of corporate presence and establishment of those documentary provisions. In our experience, if you're wholly 100% foreign-owned corporate entity, trying to get investors for equity ownership into your project is a really, really uphill battle. And I would really not suggest, we would certainly not be able to help you out with that. So just, everybody should just keep in mind, financing is one aspect with different requirements, and investment seeking is a completely different foray as well.
Correct. Understood. I think you have one more question coming from somewhere.
That's only the email ID which I'm absolutely share.
Okay.
I have one more question before Shailesh puts up his question. We were thinking about, so Shailesh is the incoming president for Indo-American Chamber of Commerce. And they also have a big database and a lot of members from Gujarat who are, in the similar business, probably more doing business with America, probably compared to the startups and SMEs that we have in Thai. So from that perspective, even in future, we are thinking to sort of see if we could have some, joint programs together where,
Of course.
I'll let Shailesh probably speak about it a little more.
So we would like to connect and see that our members get benefited with your talks in the coming future again. But in the meantime, I have a question. Is there any major shift in the criteria post-COVID? Because you have been investing in a lot of startups earlier also, and I'm sure you will continue to do it in the time now also. So are you looking at the prospects and the perspective has changed from them? How you used to gaze the business plans earlier and now?
Well,
Yes.
definitely we're seeing a lot more, I would say, with the startups in general. Actually, Bijal, you want to take this one?
Sure, absolutely. What we do is not only facilitate financing, but we also go in as investors, right? And so one of the critical components that we are looking at as investors, and across the board, I think it's safe for me to say for multiple levels of investing, that yes, criteria has changed. There is now a very hard look with magnifying glasses as to who is composed of the team when it comes to any kind of an SME. We're really looking into the historical experiences that the team is bringing to the table. And additionally, we're having very in-depth conversations with the main players, okay, who are the heads of these SMEs, working and being very well experienced with the Indian clientele. We're very well aware that, you'll have, one person, who's sort of, putting in some infusion of capital. You'll have another one who's the task person who's taking care of all the nitty gritty details, and then you'll have some other team players. We are taking a very, very strong look at the teams, what they're bringing to the table. And we're also exploring with them saying, okay, what brought you to this journey and where do you plan to go with this? And, we don't really look at even saying, okay, my exit strategy is that I'm going to be making, $50 million in 2 years and, I'm going to sell and I'm going to go public. Okay, well, I'm happy for you. That's just wonderful. But now let's talk the real numbers and let's talk about how you're going to be dealing with your competition, et cetera. And so, yes, there has definitely been a shift in the review process. And additionally, even in the venture capital frame, of which I spend, 8 to 10 hours a day in the venture capital universe, working with the big investors, for my clients' projects at times. There has been a definitive shift. They are not just throwing money at projects just because somebody's well connected. They are really now opening their eyes up to a hardworking, entrepreneurial-based teams who are able to show them that they're above and beyond the call of duty. And I think I would leave it at that you have really, you can really shine if you're a hardworking entrepreneur and if you've got some creative ideas. This is your moment.
Thank you, Bijal. And Ronak, I also want to know if the credit financing still makes good sense and competitive when the banks are flush with funds and the interest rates are as low as 7%. I agree that the banks are busy doing the government schemes and incentives and implementation, but at the same time, they also have mandate to help all this, especially the SME sector. So where do you see this credit financing business in the next 6 months, especially for this?
Are you talking about for the domestic bank in India,
Yes,
or with the
yeah,
the
especially for
supplier
the
credit financing for international trade?
especially for the domestic businesses.
For the domestic businesses with the banks in India, definitely just the way that Saurabh actually started off from the very beginning, that this is just more of a belief that we're in. It's just this time frame with the COVID situation. The minute the COVID situation is done, I do see the banks going full force in the lending aspect. The economy is going to get very strong. I can assure you, I mean, this is a recorded seminar, so mark my words, the minute this COVID situation is done, we will see the largest worldwide economy in our lifetime. Just think about it this way. 1918 to 1922 was the Spanish flu. What happened from 1922 to 1929 in the United States? It was the roaring 1920s, the richest time of America. It was such a peak time, it was unheard of. Well, guess what? We're about to have that again. If everyone is vaccinated by, let's say, this time next year, you can see the worldwide economy going to such strengths. I mean, it will be unheard of. And India is going to get a massive, massive amount of business. It is going to be a lot of business that India will be getting. The United States also, they're ready to go. This election really doesn't matter for us. It doesn't matter if it's a Democrat or Republican. Next year, the minute the vaccine is issued, the economy is going to be extremely strong. So I urge everyone to let you know that this is just a time period, sometimes just kind of credit crunch in a way, where we just kind of have to go through. And then you will see the business going extremely strong. And it's going to be unseen. In the United States, I think the largest economy we had after the 1920s was around 2005 and 2006 during the Bush administration. It was extremely powerful in America. And after that crash, yeah, it affected America for a very long time, no doubt. But after this COVID situation, I see our numbers being, if not almost double than that of 2005 and 2006. So this is your time to, and I'm talking to everyone here, to set everything out. Have your logistical plan laid out. Start getting everything into place. Start getting your partners overseas ready to go. Because the minute this vaccination is out worldwide, traveling is going to be left and right. I mean, look, Bijal and I, we have clients right now in Hong Kong and Singapore. The minute this thing is done, I'm taking the next flight out to Singapore to meet with them. And these are large transactions. I mean, the average transaction size that we're getting from Singapore is around $30 to $50 million right now. And we're getting deals from Hong Kong also. So the thing is that this is going to happen worldwide. You're going to see India going on this massive, massive economic scale that's unseen before. If you think India did well in these last 10 years, put on your seatbelts. That's what I can say. India is really going to go straight up. And we are betting on it. I mean, this is the reason why we personally have about 10 different joint venture companies in India right now, because we know that India is going to be going extremely high. We may be in New York, but फिर भी दिल है हिंदुस्तानी. So
I'm quite energized and motivated. Good.
Well, and also, Sailesh, another aspect that we have seen is that, you know, the banks, while they play a very critical role, what we are always going into in working with clients, and I think that I would like to encourage with all the listeners, is that, you know, it's not a and or approach, right? When it comes to being able to fund your business aspects. What you want to be able to say is, okay, the bank will play its traditional role. And yes, there's a certain amount of debt leverage that you may need, okay, in order to be able to sustain operations. Then the credit financing can be another layer that you can take on so that it is not adding to your debt, but it is giving you the cash flow that you need for critical operations to be able to continue, right? And then you have the other performance guarantees and the performance bonds and the SBLCs. So these are all different ranges of products that entrepreneurs really should be looking at, because the kind of world that we're now all going to be stepping into is going to be quite different. And we just wanted to be able to have this opportunity to present the different options to people. and then to really be able to explore. And one key thing, we have a couple of our colleagues over here who are very much vested in cryptocurrency. You know, we haven't even talked about all of that. So, you know, the world is your oyster for all the entrepreneurs out there, you know. So it just comes down to thinking outside of the box, expanding your horizons, expanding your network, and having dialogues with people.
Yeah.
And that's a whole different webinar we can definitely have. It's on cryptocurrency then. And what India's take is going to be on that. And I think India's going to jump into that.
Wake up our European counterparts, you know, for the crypto talks.
Indeed.
So, Piyali.
Yeah, I think, yeah, we have already sort of taken some additional time over 5 p.m. here. So, no, I think it was absolutely insightful, very informative, and thank you